guests. We have Rich Rosenblum, the co-CEO, co-founder of GSR. We have David Lawant, the head of research at FalconX. We have Hedgehog, the co-founder or the founder and CEO at Fisher8 Capital, and Zahir, the founder and CIO of Split Capital. Welcome, everybody.
Thanks, Tim.
So, yeah, it's quite a big day to, I guess, launch a new podcast, but, this is what we're doing. It's been a pretty crazy day, crazy weekend across the crypto markets. And I guess I think the biggest thing here seems to be like Japan and the impact Japan is having on sort of the rest of the world. So perhaps like Rich, would you be able to sort of explain how you sort of understand the situation?
Sure, yeah. I think speaking more generally about carry trades, I think that has less to do with Japan specifically. I think I'd book it more that there's three different main types of uncertainty that have been building. One is the U.S. election, and I'm seeing a very tight correlation between risk markets and the probability that Trump's going to get elected, which it finally flipped, and Kamala's more likely to get elected as of Friday. The second biggest is that interest rate uncertainty really peaked, and market thought we're likely going to get our first interest rate cut September 18th, the next meeting. But after the low payroll number on Friday, suddenly discussion shifted towards maybe the economy's in a much worse state than expected, and we're going to need to have a emergency cut even before the meeting 5 weeks from now. And then also the third uncertainty peaking is the geopolitics in the Middle East, where instead of it being a little proxy war, with missiles, it's turning into a much bigger proxy war that might involve the threat of nuclear weapons on both sides. So the combination of all three of those uncertainties peaking increased the correlation for funds that trade in all these different macro markets. And so that alone will increase the VAR if you're a large macro fund and playing any of these markets. Put that together with these positions actually going against macro players, and seen and heard significant players just getting cleaned out of the weekend because they need to meet margin calls come Monday or even over the weekend. So they've had to exit positions, in some cases very sloppily. And it used to be that crypto didn't have carry position. It was just Bitcoin getting knocked out by groups that are more tourists in our market. But I think finally now crypto is a bigger market. We have our own carry trades that people are getting knocked out of as well. So far it's traded with a very high correlation to other risk markets and hasn't traded like gold, but it's a bit early. Similar things happened in March 2020 where peak COVID paranoia, Bitcoin got trashed, but then it's had a 20x since then from trough to peak.
Okay, so do we think this is a short-term dip or the start of potentially like a longer, deeper downtrend? David, what do you think on that?
Awesome. Yeah, Tim, I think as Rich mentioned, the most important thing right now in the market is that I believe there's many different cross currents. Some of them are potentially positive for price, others are potentially negative for price. And I think right now it's really hard to distinguish exactly what is in the driver's seat in the short term, right? So there's the presidential election outcome, which could be positive for crypto, but then Kamala Harris has been advancing a little bit in the polls. On the other hand, I think that right now the likelihood of an interest rate cut in the September Federal Reserve meeting, that's on September 18th, that looks exceptionally high. I think now the discussion is whether we're going to see 25 or perhaps even, as the market is pricing right now, more likely a 50 bips cut. So there's a lot of things that could be positive for crypto. On the other hand, there are some that could, in the initial term or in the short term, be slightly negative, like the geopolitical tensions that have been rising, and also the unwinding of the carry trade, which I think even if there is not a direct correlation to crypto here. It does impact risk assets, and crypto is one of the few asset classes that you can trade with liquidity and ease over the weekend. So I think we saw some spillover impact on that. I do think also there might be some kind of technical indicators or things that are more specific to the crypto ecosystem. So things like liquidations, and if you actually look at the slump that we had in on Sunday, it was actually very concentrated in three kind of bouts of selling pressure, especially the last two of those, which were the strongest. Those are the ones that drove us from like 57, 58K all the way to some point below the 50K level. They happened like in a very concentrated time period, and you saw in a very short period of time strong applied price declines, huge volume upticks. In some cases, you were seeing like hundreds of millions of dollars straight in within minutes, and a very large dispersion of prices across exchanges, which kind of suggests kind of disorganized and price action and type of forced selling. So we saw a fair amount of that on Sunday, I think, and I think that's part of the reason why we're seeing some recovery today. This is all to say that I think it's very hard to say what will happen in the short term. If history is any guide, when Bitcoin has these kind of sharp drops, it tends to stay there over the next like 1 to 4 weeks, but it also tends to outperform significantly if you think within a 3 to 12 month kind of time frame. So if I had to guess, and of course everything is kind of still playing out and unfolding, I do think that we could still see some more short-term selling pressure or a market that is perhaps at best flattish. But when you think about more like the medium and long term aspects and what even all this unfolding of the week can happen, we can get into more than that. I think the outlook is still pretty strong, and that's what we're actually have been seeing at our desks. I think most of our clients, they do understand that we can have some short-term turbulence, but we have been seeing more buyers than sellers over the last 24 hours at our desk, which reflects a more like institutional type of flow.
Super interesting. Now, with such like a sudden massive market event like this, how do you like trade through something like that? Perhaps like Hedgehog, do you want to weigh in on that?
Yeah, so I mean, obviously increased volatility, uh, generally low liquidity. We also just size down in general. Our stops become wider. These are all just like general facts of trading a more volatile market. I think as a pure pure technicals trader, it's sometimes it's quite hard for us to judge where our stops would be, especially if you're trying to catch a knife like this. So more often than not, we kind of wait for the move to play out somewhat and then use like let's say the low of the day as our stop. I think for the markets in general right now. So he just asked me on Telegram if I'm bullish or bearish. I think in general, like for us, Bitcoin here is at a pretty critical level. I think if we reclaim this level here, I'm bullish, but it's basically trading at what has been support for the BTC price over like the last 3 to 4 months. Every time we've touched here, we've kind of bounced quite aggressively. But today we've kind of gone through it, and now we're testing it from the downside. So as a technical trader, it's actually easier for us to be short here because our invalidation on the trade is a break past probably something like 55.5K. It's actually, yeah, and then once we break that, it's easier for us to long. We just then use that level again as an invalidation for our long. So yeah, that's kind of how we've been playing the last 24 hours.
Cool. And so here, how about you? Like, do you have similar strategy? Like, what kind of things are you looking for in a potential recovery?
Yeah, I think we're probably a cross between most of the kind of guests we have. I think we really look for the data as much as possible. So, I've been kind of tweeting nonstop about like where the indicative flow is coming from, how our markets are kind of reacting. I think when we really peel it back, it's like a third order derivative of like Nikkei is falling, and then you have SPX falling, and then you have like BTC falling. And this happened, all over last night. I think it's really hard to understate how insane the recent moves have kind of been on crypto, on Nasdaq, on various indices. Really, this is not very common stuff. I think we see a lot of headlines that Nikkei like kind of had its worst day since 1987. Like these are very, very large kind of segment events. I think even though the selling has been pretty orderly, it's good to remember that this is a very real example of people's lives, right? When the stock market shrinks 4%, you are literally telling the entire world that your economy is like contracting within that day, right? In a way, right? It's a crude metric, but it's very real. And so you're kind of seeing Nasdaq now in August, in particular, at the lows, almost equal level to where BTC was. Obviously, like with more beta. So for us, like these kinds of metrics really matter in order to determine how oversold we kind of are. And I think most importantly, it really is a volume game, right? Like when you have billions, hundreds of billions of dollars exchanging hands at the lows, like that's really what we look for. ETH and BTC today, both are going to post multi-year volume highs, and like the day is not even close to being over. So Binance is doing like an insane amount of flow today. So all of these things really, they have a huge kind of importance in order to determine, really where we are in the selling phase. And I think similar to Hedgehog here, I think we kind of have a very similar view in that overall, like if you really peel it back, you're not really getting these kinds of insane moves unless, you're really going to push over the edge and puke down another 50%. So it's hard to really be a seller unless you're doing it very, very tight. And it's hard to kind of not start being a little bit more active on the bid side, in our opinion.
Yep. Okay. And are we anticipating, or is anyone here anticipating that there's going to be potentially like any sort of reactions to help the economy? Like, is anyone anticipating that there could be an emergency rate cut or that kind of thing?
I think it's much more that the Fed is going to react what the market does. So if you have irrational moves going from one of the regimes in the Middle East causing there to be more fear in markets, the Fed is absolutely going to react if markets are in duress to stabilize markets. So it's less that the Fed is planning and already has a plan to intervene. It's more that they are going to, as they have consistently in the past, to act when they need to. And I think that if we saw double the move that we had today and we had circuit breakers activated in equities, probably would have seen it today. I think if we don't have a deterioration from levels we saw today, they're going to wait it out only a month away and just do a bigger cut. I think a lot of it's going to come down to the direction of markets and actual actions that happen in the Middle East in this next couple of weeks.
Yep. Okay. And then how is this, what's happening basically in the ETF world? Like you've had, we just saw the launch of the Ethereum ETF. You've got companies, buying Ether for the first time, and then it's not too long and they're still, seeing it go down, 30%? Like, David, I mean, your company obviously works with a lot of the ETF stuff. Like, do you have any insights on what it's like for companies to experience this?
Yeah, no, this is a great question. I think to Zahir's point, let's see what's going to happen throughout today. There's many data points that I'm very interested in seeing how they come off. This correction has been interesting in a few regards, perhaps because it happened over the weekend. But like some indicators, they are slightly different from what we would see, I think, in a regular, typical kind of big crypto correction. One of them is, let's see how volumes will print today. Looks like we'll see a big recovery, but yesterday volumes were, in my view, surprisingly timid. Spot volumes yesterday were around $12 billion, looking at like trusted exchanges, which is a regular weekday for July, which is typically a low liquidity month. That's about half of what we used to see in March, for example. And these are numbers for like typical Bitcoin spot trading. Perhaps for context, the volume we saw on Sunday, both on the spot and notional volumes on the futures market, those were about the same numbers we saw when Donald Trump did his keynote speech at Bitcoin Nashville like a week ago or so. So like you would expect to see, I think, a lot more of volume in the market on that day. And then perhaps the answer here is that because traditional markets were closed and it was a weekend for during U.S. hours, maybe we're going to see some of that reflected today. The other thing is, if you look at like some of the derivatives indicators like funding rates or bases, actually a lot of the bases are positive for dated futures, and for perps, funding rates are negative, but at least for the majors, especially for BTC, perhaps not too negative. Usually when you have these big market corrections, you would expect to see massive volumes and also a big drawdown on the derivative side, sometimes kind of leading price action. We're not seeing that. But then again, that was Sunday. On Monday, I think that's when we're going to have a better read of the full extent of the correction. One of the things that I'm very interested in seeing is how ETF flows will behave, to get to your question, Tim. I think so far ETF flows, they have been very resilient. So like, especially if we look on the BTC side of things, which has a slightly longer trading history because they launched in January, we had a number of instances in which the Bitcoin price went from like 70K to the 60K level, even very recently a little bit below that. And I think ETF flows kind of surprised on the upside. If the Ethereum ETF has a slightly different dynamic because it launched very recently, so we're still going through that phase of dwindling GBTC flows and positive flows from most of the other issuers. So there is a little bit of this novelty effect and also these initial ETH inflows. But I think overall the outlook remains pretty bright for ETF flows, especially if you think on a midterm perspective. And by midterm here, I'm talking about 3 to 6 months. I think we're probably going to see a number of interesting milestones on the ETF space, including the unlock of some of the big wirehouses and larger platforms and model portfolios that can generate and can bring in a fair amount of new capital to the space. The second, which I think is a little bit sometimes overlooked, is that the SEC will probably answer the application for options on spot Bitcoin ETFs by the end of September or beginning of October. That can also be a big driver for liquidity into this space for many reasons we can discuss. So I think overall the outlook here looks really great. Of course, we had a pretty eventful weekend. Let's see how things are going to play out. The ETF fixing windows that will happen in a couple of hours. So then we'll have a better sense of how the ETF flow looked today. What we can see is that there was a fair amount of volume on ETFs today, suggesting that we might see some reflection on flows. The volume number was big, but not huge, especially compared to what we were seeing in March and times when the market was a little bit more agitated on one way or another. So let's see how it shakes out. But I wouldn't be surprised to see a fair amount of outflows on ETFs today. But I do think that the mid to long-term picture still kind of remains roughly the same.
Cool. Rich, do you have any thoughts on what it's like for the, I guess, ETFs and for, people buying into ETFs to sort of experience this?
Sure, I think it's definitely fascinating and important to track what's going on with the crypto ETFs. I think it plays into the secular growth of the space, having incremental buying from new entrants. But from our perspective, It's mostly just having a different wrapper for the same flows. It hasn't been that it's the institutions coming and it's pensions and endowments. It's just the same retail. Instead of buying it on Coinbase or buying it on Uniswap, they're buying on Fidelity, or another, wire shop in its form of ETF. So don't think it's really changed the picture as much as people think, because it's not actually a different participant, as the same participant participating in a different way. But you could say it's sort of the gateway drug for having some of these institutions actually start trading the space. And if they have, for those that are having an incremental asset class on their books, they're going to start looking at Ethereum if they had Bitcoin. They're going to start to look at Solana if they bought Ethereum. So I do think that it's helpful, even if so far with demand and volumes, it's only been on margin. As far as what it means most recently, yeah, I do think that that's actually been an element that's reduced volatility in the space, because we've seen a lot more volume be stuck during the day and during the week rather than in the weekend. So it has pushed more of the volumes into more traditional TradFi hours.
Yeah, cool. And then obviously there was the US unemployment data, and then I read a lot of headlines about the possibility of a recession. Um, I wonder, what do people here think about that? Or do we think that's likely, and how would that affect crypto?
I think we're seeing this change pretty rapidly. I honestly don't think that there's a huge kind of push towards a recession, kind of happening anytime soon. I think we're just in like the most fragile period of markets, both with seasonality for trad and crypto, but also because people are just so hypersensitive to like any sort of pain. And I think now it's also being used as kind of a political tool, right? A couple of months ago, if you had bad unemployment numbers or something like that, it would be a huge problem. Now you have like Donald Trump and Kamala Harris being so neck and neck. Like the economy matters a lot more, even if it is just until November 5th. So I think every single print will be meaningful. The Fed always likes to claim that they're data independent. Data dependent. Like not partisan in any way. But in reality, the thing is like they also can't butcher an incumbent, quote unquote, or kind of push for a you know the opposing candidate. So I think there's a lot of considerations here, but I don't think we're kind of veering in that direction. I think today's ISM figures for services PMI were quite positive, and I think the market respected that. I think it's a big reason why Nasdaq actually did well, and started pricing in or pricing out rather the recessionary fears.
Yeah, I've
Yeah.
got some thoughts. I think the two words thematic and episodic really resonate, in that there's different types of markets where people focus on different types of things. And even though there's a focus on jobs, it's really more about inflation and how the relationship between jobs impacts inflation. And I think that there's been a lot more focus rather on the industrial economy, but on the more technological part of the economy. And that's why we've seen a pretty high correlation between Nvidia and crypto, because even if these are things, whether it's the chips that are fueling AI or crypto, that's fueling a new decentralized economy, don't really have the cash flows to support current valuations. So it's more about predicting the future. And I think the majority of the growth of the S&P this past year has been in just these 7 stocks that are more technology related. So I do think, even though there's been a focus on jobs, it's more to do with the fact that relates to inflation, since the growth isn't based on the amount of humans that are producing that growth. It's more based on the knock-on effects of the inflation produced by the number of humans that are employed at any given time.
Cool. And so here you mentioned the election. How big of an impact has that had? Like, I mean, we've seen such a it seemed Trump had so much momentum, and now things have sort of changed around quite a bit. Has How much has that impacted the crypto market? Because obviously, Trump's been appearing at Bitcoin 2024. It seems to be, there seems to be a lot of like correlations there. how's that impacted everything?
Yeah, I think definitely impacted crypto pretty aggressively. I think a lot of, especially non-major, actually all of it honestly, but especially non-major assets, anything that has to do with establishing a presence in the U.S., any sort of business that people want to run through a project in crypto, will definitely be adversely affected if Donald Trump is not elected, most likely. It seems that the existing kind of Kamala Harris administration isn't really taking a stance on crypto. Maybe it's not as negative, but in reality, I think not being as positive will definitely be a little bit of a drag on prices and kind of any sort of formidable development across the next few years. I think the biggest problem going forward is just going to be watching that like line teeter between Donald Trump and Kamala Harris. But it's also kind of challenging because betting markets or even predictions or polling data is not really relevant, not really the best kind of metric in order to determine this. So unfortunately, markets will be watching this pretty closely, both our market and traditional markets, but it will kind of have a larger drag on price that if the odds start flipping in the other direction.
Okay, and then is Mount Gox an element in any of this? Like it sort of seemed like everyone was so terrified of Mount Gox for so many years, and then by the time it eventually came, no one sort of seemed to care. Like, are we witnessing any selling? I mean, it seems like a good portion of it has been handed out and is available to people on exchanges, um, or is it just sort of irrelevant in the broader scheme of things?
I can take a stab on that one.
Don't really think it's irrelevant. Oh, sorry.
Yeah, go for it.
Oh, okay. Yeah, I don't really think it's irrelevant, but at the same time, I think it's just part of the broader narrative. When price went up, people said it was irrelevant. Now price is down, people say it's relevant. So I think it's just like a narrative thing. The thing that's most relevant is the fact that BTC has traded above 55K for months on end, and now it's below that. I think that's the most relevant thing. Like the markets essentially at the end of the day are like a supply and demand thing. If we were able to, eat up that supply and then make new highs, it'd be like a very bullish thing, right? So, but as the conversation has been this whole night, it's just one part of a variety of factors. I don't think by itself it was particularly very important.
Yeah, I agree with that. And perhaps what I would add is we are coming fresh from a very refreshing kind of situation in which the market got really scared about the Bitcoin that the German government was selling. And then, and even there was a big correction ahead of the event. But when the sale actually came, and that would happen within a relatively short period of time, I think 3 or 4 days, the market was able to absorb that supply extremely well. And that was also a sizable amount. So I think that was a little bit of a refreshing perspective. The question, however, is how the potential Mt. Gox release differs from the German government. And one of them is that about 60% of the German government sale went to liquidity providers instead of straight to exchanges. So that probably helped cushion the price impact a fair amount. Here on Mt. Gox, the difference is that most of the release, actually, the release is going pretty much all to exchanges. But on the flip side, what is positive here from a price perspective impact is that it's a much more distributed base of holders, I would assume, and probably maybe likely to hold over the long term. So I don't think that the Mt. Gox, I think it deserves to be watched because again, it's a little bit different type of release compared to the one we've seen. And of course, the ability for the market to absorb the selling pressure can change over time. But overall, it's not something that concerns me too much as well.
Yeah, I wanted to just mention on that too. I think, you know, regardless if the money from the German government went to liquidity providers or if it went to some black hole, just the initiation of the transfer, because those are tagged addresses, spooked markets, right? So everyone's pretty sharp. Like it doesn't actually, the selling itself is not the interesting part. It's the initiation of the transaction. I was really surprised because I think it was kind of, and Hedgehog, let me know if you think the same thing. I could see the kind of price getting hammered by on BTC when those German coins were kind of hitting the tape. I was really surprised that they didn't post the coins afterwards, instead of telegraphing it to the entire market or doing like some sort of physical OTC swap, like something to make it less impactful. I was actually genuinely surprised by that. I think also broadly with any sort of well-telegraphed event, markets will price that in way faster than the actual event happening. And I think this kind of happened with Mt. Gox pretty broadly. This has been the #1 overhang for a decade now. And I think people have digested it so much so that, now that it's finally here, I don't think you're going to get some sort of discernible way of being, out of the market waiting for that to happen. Because there's also no real way to determine how much of that flow has kind of been churned through the market. So you can't really be academic in the process of saying, well, should I care? Should I not care? What should I kind of buy back in? That's kind of a problem that exists in these markets. And maybe Rich has more color on this, seeing it on the other end of the business. But I think broadly speaking, like if you're on the buy side of the business, you really can't determine how and when and why you should actually start buying on flow that kind of goes directly to exchange and is kind of lost after a while.
Yeah, the two points I'd throw out there. One is there's a difference between giving people crypto or giving people cash and thinking, what do they do with it? In the Mt. Gox case, do they sell that crypto? In the FTX case, do they take that cash and do they buy crypto? The first case is bearish, the second case is bullish, but not nearly as much as in the Germany case where it's literally selling. And then when it comes to actual selling, there's different manners with which you can sell. If you break it apart and you sell to different participants who are professionals and pollinating into the market at their own frequency, perhaps keeping some or doing OCC trade, putting it into stronger hands, that can have less of an impact. And then there's also the difference between selling into a bid when the market is strong and rallying. And one of the things that governed that bid was when Trump's probabilities were on the rise. That's when there was a really strong bid to buy Bitcoin. But if somebody were to be selling those coins, overnight this weekend, an extra billion of selling might have knocked the price down to, 45,000 instead of a $49,000 low. So whether it's actually, coin or cash being dissipated into the market, it makes a big difference. And then also whether you're selling into strength or weakness makes a big difference.
Yeah, and talking about Telegraph news events, what about the idea for the US to buy $1 million of Bitcoin, as it's sort of been proposed recently, with the idea of doing that in sort of regular events over a period of time? What do people make of that idea?
I'll jump at that one quickly. Overall, Trump's statement, that we're going to have a strategic reserve, and instead of selling the Bitcoin that's already been commandeered, would actually be buying it. I think that, along with his other statements, the specifics about leadership in the SEC, I think would have a significantly bigger positive impact than the combined negative impact of FTX and Luna collapses put together. But as far as the buying, a bit of Austin Powers moment saying buying $1 million of Bitcoin. I think you meant buying 1 million of Bitcoin. I think that when making promises, everyone on this call would love to see really strong promises about buying a large amount of Bitcoin, and about the fact that it's possible that in a decade, maybe a little crypto check is going to pay off the U.S. national debt. But realistically, I think that Saturday, a week ago, an RFK said we're going to buy 4 million Bitcoin. If there's only 21 in total, some of those have already been lost. It has to be realistic, because regardless of what the promises are to get elected, if it is someone stating that they're going to buy 20% of all of a scarce asset, there's going to be someone else in the organization who says we don't want to absolutely stoke inflation and like cause massive distortions in financial assets. So I think that it does help to even come through on a quarter of those promises. But if there isn't a million Bitcoin purchased at any point, it would still make a huge difference just to not sell the crypto that's already in government hands today.
Yeah, this is mostly a nonsense argument, to be honest, in terms of, buying Bitcoin on the balance sheet. I don't think any kind of lucid person would ever think that this would happen. I think it would be a bad idea for any sovereign government to do this in the near term. If they want to do it in a different way over time, they can do that. And also to publicly do it, I don't even know what kind of, you're kind of killing your own currency in a way, or devaluing your own gold, right? So how this would happen. I think the best thing that Donald Trump actually said was keeping the, reserve that they have from like the Silk Road. Okay, fine, we're just not going to sell in the market. And to Rich's point, like more importantly than anything, it's like, so long as you just don't get arrested for creating a project in the US, that's just a big milestone compared to where we are today, where like you do anything that's innovative, it's like automatic jail. Fraud and meme coin, like fraudulent meme coins aside, but like anyone who's trying to build something that, might be valuable, it's just the bar is so low that like if we could just remove that alone, it's a pretty big kind of catalyst for the space moving forward.
The question I think people should be asking is, where's that money actually coming from? I don't think it's a swap of gold for Bitcoin. That could be against national security interests. So if it's just printing new dollars to buy Bitcoin, that might make Bitcoin prices completely explode upwards because not only you're printing money, but you're printing money to buy the horse that's already the fastest. So I think at this point, it's very aspirational, promise driven to get elected. So it's hard for us to have serious considerations on some of these statements.
I fully agree that this is highly unlikely to actually materialize. But perhaps I think actually the main benefit from this is that it kind of shifts the framework of discussion around Bitcoin, especially with skeptics. If you think like the Paul Krugmans of the world, they used to say that Bitcoin should be should be outlawed. Now he has to argue why the U.S. government should not stockpile like a reserve of Bitcoin. So I do think that the positive side here is perhaps a reframing of the discussion a little bit in certain circles. But other than that, I don't think this initiative might have very strong legs.
Okay, and have people been following the news about jump trading recently? Like it seems like they're just getting rid of everything, even selling like small altcoin positions. Does anyone have any theories like why this is happening?
You said jump trading and they're trading over the weekend?
Yes, and into today, yeah.
Yeah, there's certainly been a lot of speculation, and I think often when there's just pure rumors, it's probably not worth speaking about. But I think the interesting thing about crypto is, you can look at Arkham, you can look at places where there's known wallets that are being tracked, and so it is true that there was a significant movement, and I think that normally wouldn't pick the weekend to be having all that movement, especially as a liquidity provider. You want to be accepting that bid offer and mitigating volatility. So if while a market is puking, you're paying bid offer to get out, it does lend me to think that it's more about some type of a forced move. So I think that those positions, I think that they're still extremely in the money. What I mean by that is, I think they're very strong, intelligent, smart money institution that even if they were selling those positions in duress, I think that they still made significant money on those positions. But timing it over the weekend, someone could be led to assume that there was money that was needed to come up with meeting a margin call in another market.
Okay, and sort of putting everything together, it's been a bit of a crazy few weeks, few months for crypto when you've got, the German government sales, Mt. Gox, the impact of the election, um, the recent sort of macro climate, even things like Jump, even you saw today the US government moving more crypto. Um, is it still pretty like impressive that we're still sort of where we are? That, everything hasn't like collapsed so much like it's done before. Um, and like, is there, anything positive we can take from here about maybe crypto's getting a little bit more resilient? There's a little bit more strength to it.
Um, I think I think it's probably wrong to talk about crypto as a whole. Assets are not really moving in correlation with each other anymore. Like I would definitely say that BTC is trading quite strongly, but then if we look at ETH, that's trading quite weak. Um, if we go back to all the charts and we look at the levels that have been defended in the past, Solana at 110 that got defended again today, but ETH, that level for ETH was like 2.8K, and that broke, I don't know, I think like yesterday morning. It got retested and it just completely sold off since then. And then if you look at altcoins, they've just been massacred, not even the past week, it's been like the past month, right? So I think it's probably, yeah, wrong to say that crypto as a whole is doing well. I would say I definitely agree that BTC is doing quite well. It broke that level that I keep talking about, and it's retesting that level already. And it's not really doing the same puke that we've seen ETH do over the last 24 hours. So that's kind of, yeah, my take on the market as a whole right now.
Yeah, it's almost a flight away from you know utility, where let's say we're talking about utility as something other than um, value protection, whereas for Bitcoin and whether it's Ethereum with smart contracts where you can stake it, you can restake it, you can get airdrops, you can get points. Same for Solana. These are two of the assets that got most sold because they're basically crypto's carry trade. So in the same way that the yen carry trade, the VIX carry trade are getting obliterated, I think the fact that these two assets were leading on the way down on the lows overnight, being punished even worse than the meme coins, that's a sign that it actually is somewhat being abused because of these strong different types of utility, aka carry they're able to achieve. But absolutely right that I think that the dominance of Bitcoin of going over 60% is a sign that things are not okay in the rest of the space. And if you define alts by everything that's not Bitcoin, ETH, or Solana, alts are now in the red for the year. So despite not one but two new ETFs and all these new eyeballs on the space, the best regulatory position the space has been really ever. It's actually been a pretty weak environment for alts overall.
Okay, and then to sort of round up, how is everyone here sort of anticipating like the next few weeks to play out? Like, you know, do we think things are going to get a lot worse? What are your thoughts on, how you're sort of planning to assess the next few weeks?
To me, it looks like the short term is, I would define it as highly uncertain. But in order to try to avoid a non answer, I would expect the market to be flattish at best in the short term. But I do think that in the medium to long term, the outlook is still very positive, and I think it speaks to the relatively muted reaction that we saw on BTC. Overall, I think the general perception with most folks I talk to is that like some of these macro shocks, they can actually characterize the beginning of a bull market and not the end of one, because I think right now there is a strong perception that there is going to be some sort of liquidity support. And but perhaps most importantly, these type of macro dislocation events, I think they show why Bitcoin was invented in the first place. And of course, we're very far from a world in which Bitcoin is a dominant monetary asset, but these were exactly the types of things that Bitcoin was made to fix. And I think over time, as we saw in 2020 to a fair amount, I think folks start to realize that that Bitcoin's fundamental use case is actually a very important and very useful one. As these cracks become more visible, I think that the Bitcoin investment case starts to become clearer to a broader range of potential investors. So medium to long term, I'm very positive. Short term, I think honestly it's anyone's guess, but I would bet us to be more on the flattish side.
I'd say the lower it goes, the higher it's going to go, and that plays into my positioning. Coming from a very fundamental background, which is more mean reverting, it's the opposite of more of a technical. By technical, I mean chartist, which is more retail momentum driven. And whether it's comparing it to March 2020, where the price plummeted, but then we had a plunge control and printed a ton of money. And that's why the market 20x'd for Bitcoin. Similarly in these next couple of weeks, regardless of which of those three main uncertainty catalysts, if it grows, if you see a significant drop in Bitcoin, not only is there going to be more distance from that trough to get back to where we are here, but the more convicted I am that we're going to see significantly higher levels, because the further we go down today in markets, the more money that's going to be printed.
Yeah, I agree. The only thing that's certain is volatility. I also agree that the lower we go, the higher we go up, but probably for a different reason. It's just an exchange from forced selling to stronger hands. That's kind of how we like to view the market. Yeah, it's also tough to pick a direction, but yeah, volatility will persist.
Yeah, and I think to everyone else's points, I think the hardest thing in crypto is always like the medium term, in my opinion. Long term, everyone has a bullish outlook. Short term, you might have a view for 24 hours, but having like a 3-month view is quite challenging because of how much the image could change, right? There's some weird thing about crypto where there's always some wall of worry. There's always some new overhang, some new regulation, some new like final boss to kind of conquer. And I think we're kind of at the point now where, we'll, things feel a lot more interesting for crypto kind of coming into Donald Trump presidency. That's kind of how the market wants to price it, and so I think that's the direction that people are going to kind of start positioning themselves in.
Awesome. Well, that's going to be it for today. I want to thank all of my guests, David, Rich, Zahir, and Hedgehog. That was all super insightful and really interesting, and hopefully it made people feel a little bit better about today, despite the chaos and the red candles.
Yeah, and I really want to give a special shout out to Kobe for being the #1 supporter of the new podcast. Thank you, Kobe, for joining us for the whole stream.
Awesome. All right. No worries. Yeah, that's it. I hope you had a good episode. See you on the next one.
Thank you.
See you guys.